I've got Harendra Kumar of Elara Capital joining us today to discuss more. Harendra, good afternoon. Thanks so much for joining us. I'm sure you had a great Diwali. Wishing all of you at Elara great happy Diwali and the year ahead. How are you analyzing the setup for India? Yes, we have great outperformance versus the world on market front. Even our economy is much finer shape than rest of the world. But how much of all of that appears to be built in to the price? Or do you think the earnings quality will carry the valuations forward even from here on?
Yeah. Happy Diwali to you, Ajaya, and everybody at ET Now. For the markets, there are obviously the markets are conflicted in terms of which direction to move because the conversation around the world is quite bleak. But somehow India seems to be holding up and its weight in the MSCI index keeps going up. Not that they are buying more because they've been selling other emerging markets. Plus, the Indian retail investors have been contributing a big way in supporting the markets, either via mutual funds or through direct stock holdings. So this is the liquidity context, which is likely to remain. So the liquidity context is challenged. So there are no aggressive tailwinds for the markets to go on a secular one-way run. It is supporting us. So in the interim, we expect that the markets will possibly go to 20,000 on the Nifty at this given point of time, largely backed by banking and automobiles. So that is the immediate short-term context that we are seeing. Tech will be challenged. Like you mentioned, the Nasdaq is capitulating. The narrative in the Indian tech stocks has also moderated at the moment. So we're not expecting serious outperformance of IT. So yes, tactically, Nifty has some headroom, but it's, on the long-term direction of the market, it will be possibly after the Q3 numbers that one needs to take a watch and, understanding the global narrative build-up, inflation, recession, etc. But over the short term, I think there is some optimism that one can expect from the markets.
Harinder, what is your call right now on the most important variable which seem to have impacted flows, sentiment, a lot of other things as well, and that is US inflation. Do you think peak of the US inflation is actually behind us now?
Yeah, this is a very interesting question, Ajaya, that you're posing at the moment. So there are two sides to this in the market. One, who are betting that US is going to enter a recession, probably 6 months down the line, and that's what the headlines have been telling us. But the policymakers are at the moment pointing out to a mild slowdown in growth and their ability to control inflation. If option two plays out, then the behave in a very, very different way. Because currently at the moment, markets are trying to price in a recession at the moment. So, the variable, yesterday's GDP print is actually, veering the conversation towards probably the second option. And that will be interesting outcome that the market is yet to reassess and recalibrate. If that happens, the bets will totally change. Maybe it is tech, maybe it is metals, maybe you have a recovery in the rupee, maybe you'll have a beta that comes up. So at the moment, markets are betting on a recession, but the print seems to be that the US is in much more control. And if that plays up, you need to recalibrate your bets and your portfolio positions.
Okay, great. Let's come back to India. India increasingly seem to have taken a stance that we would try to curb inflation, but not at the cost of growth. And hence, there is a kind of a drag even on rate hikes and much more calibrated rate hikes. We don't want to break the back of the growth, in the economy, and that's why we are standing out. Do you see that also getting moderated now that energy has come down, food, pulses, almost all the contributors of our own inflation basket seem to have peaked out? Because there is an emergency commentary meeting also, MPC meeting, which is now scheduled on 3rd. So people are talking about that as well.
So Ajay, I think on the inflation, the world is seemingly a little more optimistic at this given point of time, and so also India. But if you look at it, inflation has not been such a large concern for India. Typically, otherwise, you should have political noise around inflation at a much higher decibel level. If you look at the CPI and the WPI index levels per se, They are not very high from where they were pre-COVID. So while the inflation rate might be contested and what the regulator is trying to check, absolute price levels are manageable at this given point of time. That's why you're not seeing concern from the political front at this point of time. Even when you look at the regulators, they speak about interest rates, having normalized, from the pre-COVID levels. So you had a spate of cuts, and you have reach the point where we were before COVID. So I don't think from here the regulators are going to disrupt the construct of architecture too much. So there will be a pause. There will be a calibration from this point in terms of how is growth going to behave, and that is what is probably getting reflected in the banking stocks or some of the other stocks. So I agree with you out there is that market will wait and watch from the policymakers move. And if they get signals that inflation has peaked or rate hikes have peaked or the pace is going to be slower, you're going to see the markets getting, seeing a big lift off from it.
Right. Harendra, you spoke about banking. I want to understand if banking indeed is going to drive earnings growth. Well, some of the data coming in, the credit growth data back at 18%, all the bulk of the private sector bank results, even public sector for that matter, appear to be throwing up good numbers and commentary. What would your order of preference be within financials if one has to play a 12 to 14 month kind of a picture from here?
So if you're playing momentum, clearly the momentum is backing Axis Bank, Federal Bank at the moment. ICICI Bank continues to be the preferred bet and is overall. But I think in terms of outperformance or a pair trade, I think it's going to be Axis and Federal, which will possibly outperform some of the larger ones. If you're looking at a portfolio investment in terms of deep value structural, this is possibly the best entry point for HDFC Bank. You can't get prices better than this, because we believe that all the overhang or issues of overhang will probably disappear over the next financial year. So that's the construct on the private banks. But the variable that is moving is the sharp deceleration in the NPA numbers. Now the private banks have reached a point where probably the increased, the incremental delta in terms of the reduction in NPAs is going to be lower. But the PSU banks continue to sit on a high number, which is close to around 5%. So the markets now are taking a bet that the incremental profit beyond credit growth is going to come from the reduction in NPA for the PSU bank. So hence you're seeing PSUs actually take off more than private banks at this point of time. So as a momentum trade, I think you are going to have the backing of PSUs outperforming private over the next 3 to 4 months. So that's the context in the immediate term.
Harendra, I've been reading your research team's notes for some time. Very differentiated work there. What's your big call which is coming at this juncture? And what are the top 4-5 ideas which you would back your call with?
Absolutely. So like we say, we spoke about banking, and within banking, we are having a conversation around the PSU banks at this given point of time. Then you also have automobiles. I think the BSE or the auto index is looking to start to come back into play at this given point of time. So you have a Maruti, you have a M&M, and you have a TVS, which are actually breaking out into new zones. There's tremendous earnings strength behind the stock prices, and the tailwinds of the semi-conductor issues easing up and the demand continuing over into the next year is very, very high. So banks, autos, and I think the third big variable is the power stocks. I think the conversation is not just getting lifted towards understanding names such as NHBC, SJVN, and beyond NTPC. Given that they have lined up significant capex over the next decade, the regulated ROE is going to double, triple, and they trade at very reasonable valuation. So you are to see the energy mix, the energy companies, and how they're going to grow, taking center stage from here on. So this is the new additive to our portfolios that we are speaking about at this given point of time.
Where do you see most screaming value coming in over here? Do you think another 10% from here, because there's a big tech sell-off happening, Indian IT would also come under pressure? But I'm sure there must be a lot of mid-tier companies which are clubbed under IT, but they're different, but their business models are pretty different. and are kind of shielded in many way, they also get, cobbled up, and
you have to be